Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is Jeff Halley. He's a Senior Market Analyst, Asia Pacific at OANDA. Jeff, great to have you on the show.
Good to be here, Brian. Thanks for having me.
Now, before we get your insights, let's take a look at how markets are trading across the region. Now, the Nikkei is at 26,670.78. It's down 0.35%. Shanghai Composite is up 0.58% at 3,414.72. The Hang Seng is at 26,444.19. It's down 0.21%. The ASX 200 is down 0.1% at 6668.7. And the Kospi is down 0.03% at 2,771.38. If we look closer to home, we've got Bursa Malaysia trading at 1,646.38. It's down 0.37%. And the SGX is trading at 2,848.67. It's down 0.01%. Now, Jeff, what's your view on how markets are looking across the region?
Well, Brian, I'd say one thing initially is that when we have large directional moves in Asia or Asia Pacific markets early on a Monday morning, that is typically the wrong move and they get reversed. So it's no disrespect to Asia. It's usually because of a knee-jerk reaction over the weekend. And what we've seen is this knee-jerk reaction over the weekend to these spiraling COVID-19 cases across certain countries in Asia, but also most especially in the United Kingdom, where the headlines were filled with this headlines of this more contagious version of COVID-19 that's popped up there. But on the flip side of that, the US Congress appears to have reached an agreement on a $900 billion stimulus package. This seems to have dragged on almost as long as Brexit. And I think what we're seeing is the positiveness from that starting to assert itself. Chinese markets opened up quite a lot higher today. I really wasn't quite sure why, but the rally itself is quite broad-based across industrials, healthcare, and such like. So
was that anything, Jeff, to do with the fact that they kept the rates flat?
No, not really. I mean, the loan prime rates haven't been moved most of the year, and the PBOC has been running a reasonably tight monetary policy, which is in no small part why the Chinese yuan has outperformed this year. It has a massive yield carry over developed market currencies at the moment, where rates, as we know, are mostly 0%. So the next move for the PBOC will probably be higher, but I'm not expecting that until the end of next year. So I don't think it was really that. I think it was the US stimulus package. Also news that they're going to start rolling out COVID-19 vaccinations. Also demand for commodities. We saw iron ore up 4.7% this morning. That seems to imply that things are going pretty well in China's economy at the moment. So China bucked the trend while the rest of Asia had this knee-jerk reaction on COVID-19. But we're actually seeing, as you pointed out, that a lot of those markets are starting to come back into positive territory now. So I suspect that knee-jerk reaction is very quickly running its course.
Now, just a few hours ago, I think around 10:30 Singapore, Beijing time, Japan's cabinet approved a record 1.03 trillion budget draft for the next fiscal year, now starting April 2021. Now, there's already a pressure on public finances because of stimulus spending and also coronavirus related spending. Now, what should we read into this record budget?
Well, Brian, not really too much. The Japanese government finances, it has the highest GDP to debt ratio of any developed country in the world. I think last I saw it was around 350%. Yeah. But you have to understand that the JGB market, the Japanese government bond market, most of that is held either by Japanese institutions, insurers,
housewives, right?
Banks, not housewives, but these big institutional companies. Right. They have to hold these JGBs, but also the Bank of Japan has been buying a huge amount of JGBs over the last few years for quantitative easing. So we can't call it debt monetization. They don't like that, but the Bank of Japan is also busily buying as well. So I think when you look at Japan, you have to think of one team, one dream. Yeah, so it's a nice little universe there. So although you look at the headline numbers and go, oh my goodness, this is a disaster waiting to happen, it's been like that for the last 20 years. So yeah, the stimulus budget is positive for the economy and that they finally got this thing going and it's going to be deployed and that will help Japan recover. But we don't really have to worry about the debt trajectory that it causes the Japanese government.
Now, if we swing over to the UK, and you mentioned Brexit and the Brexit negotiations not looking like it's going anywhere. We've also got a bad lockdown situation in the in the UK. Now, are there some profitable trades that could be done with the pound perhaps before Christmas?
You know, I've been saying for the last week it's going to bounce around in a very noisy 132, 135 range before we get a Brexit decision. And this is really what is going to drive the direction of the pound. So I'm still holding on to that. I mean, it has gone through 132, it has been above 135, but actually when you strip out all the noise, it's been sitting 132.35. I think that if we get a Brexit agreement, we're going to see sterling resolve very quickly to the top side. It will probably trade somewhere near 140 versus the US dollar. But if there is no agreement, and that sort of is where we're at the moment, unless something amazing happens, the market is still in denial over that, but I think it's definitely a 50-50 as to whether this agreement gets over the line or they create one. But if there's a failure in these Brexit trade talks, sterling will resolve very quickly down to about 125. So yes, there are going to be some huge directional moves in sterling before probably this week, actually. But it's a little hard to pick that because we need to understand what's going to happen with these Brexit agreements first.
Now, in terms of data and policy statements around the world this week, what should we be looking out for? After all, it's Christmas week.
It is Christmas week, but that doesn't mean that there isn't stuff happening. Most of it now has passed for the rest of the world, except for the US, which has quite a packed schedule. We have durable goods, I think on Wednesday, PCE, which is the personal consumer consumption expenditure numbers, which the Federal Reserve watches closely for November. But also we have initial jobless claims for this week, and that's expected to jump back above 900,000 jobs lost in the last week. So that's been on a negative trend for the last few weeks now as the stimulus checks have run out and COVID-19's just increased its grip on the US economy. So I think the congressional stimulus package will offset some of those gains, but most of the data this week is coming out of the US. We do have some data coming out of Japan on Christmas Day because for some reason they work on Christmas Day, but I don't think it's going to be market moving.
Now, Jeff, thanks for your time and your insights.
A pleasure, always a pleasure.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA on the ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www